All right, TVS Supply Chains, it's been a mixed quarterly set of numbers. We've got Ravi Viswanathan, the Managing Director, as well as Ravi Prakash, who is the Global CFO at TVS Supply Chains, joining in. Thank you so much, gentlemen, for taking time out. Mr. Ravi Prakash, to begin with, it's been a mixed set of numbers, largely in line with the global trend of the slowdown that we're seeing in freight. What is the outlook in terms of the segment of global forwarding solutions down the line?
I think first I'd like to say that 55% of the company, which is integrated supply chain solutions, that's continued to do well. We've grown 14.7% there. And more importantly, this quarter, we've actually managed to break even at a PBT level, and the PAT is positive. So in line with the guidance we had given in the last couple of quarters, we had said that Q2 will be better than Q1, Q3 will be better than Q2. That's what we've delivered. So it's a break even at a PBT level and a positive PAT. And the integrated supply chain segment, which is about 55% of the business, continues to do well. It's grown 14.7% in this quarter, despite us having a strike in one of our major customers because of the United Auto Workers. If that strike had not been there, that growth would have been 16.7%. Global freight has been impacted by the overall reduction in rates across the world. This has been happening post-COVID. What the company has been able to do is mitigate the impact of price decline with very smart procurements, and therefore the margins have stayed consistent. And so if you see, actually over the last year on year, we've grown margins almost around 120 basis points. So the outlook is going forward, we expect integrated supply chain solution to continue to do the way it has done in Q3. You will start seeing the comparatives around global freight normalize because in fact, from Q4 of last year, already the rates had started coming down. And we only expect that as we go along, Q3 should be an indicator of the kind of bottom line results we should be posting as we go forward.
Mr. Ravi Prakash, at the time of your IPO, the management did guide that margin expansion going forward directionally will be one of the main strategies going forward. What kind of levers are you pressing now, or if you can tell us about the coming quarters, would lead to that particular margin level coming in?
For the question, if you look at the last 3 quarters, there are a couple of levers which we've been able to employ effectively to improve our margins. The first one is, despite the intense pricing pressure in global freight, the teams inside the company have been extremely disciplined and smart about procurement. And that has actually helped hold the gross margins and EBITDA margins on the freight side. In addition, all the new contracts which are coming in the supply chain segment, I think they've been contracted well, they've been executed well. So a combination of smart procurement and operational discipline has meant that at the gross margin level, the company is doing well. And we've been very disciplined with respect to our overhead spending. We've invested selectively in business development, but all other expenses we've held very tight. And that is actually driving the EBITDA margins. When we went to the IPO, we had said that we would leverage the fixed cost base that we have had. So we have done that, but in addition, we've also been able to deliver improvements around the variable margins because of smart procurement, and that will continue.
Viswanathan, if I could get you in in the discussion, speaking of the integrated supply chain business, tell me which segments are you seeing where order inflows are coming in strong and how the demand trends are looking like?
Yeah. So again, just carrying on with what Ravi Prakash said, integrated supply chain solutions has been delivering very strong momentum, and the company has been riding on that. Where we are seeing significant growth is actually, first of all, let me say it's broad-based because across all of our markets, whether it's the US, Europe, or India, we are seeing integrated supply chain solution business growing. Secondly, it's broad-based from a sectoral perspective. We are growing in auto, in industrial, and in the consumer durable sections. So whether it's retail, whether it is industrial in terms of utility, energy, these are sectors where we're seeing significant growth. If I look at North America specifically, it's been a fantastic story given where we were 3 years ago to what we're doing today. We are seeing very high double-digit growth in North America, in Europe, and in India. So if I look forward from a pipeline perspective, very healthy pipeline. We have several opportunities at very advanced stages in all of these markets. I would like to probably call a few. There are opportunities in North America where we're talking about an opportunity to break into $100 million kind of opportunity with one of our large customers. We're looking at a couple of very large opportunities in the UK. We about 6 months back announced an all-time high contract with Centrica in the UK, and we see similar opportunities in the UK. What Centrica has done for the company is really position ourselves to be participating in large deals. So today we are seeing our ability to be a serious player when it comes to the $100 million kind of opportunities that we are seeing in the pipeline.
Okay, appreciate your time, gentlemen. Thank you for giving us a roundup as to how business is shaping up and what the outlook is for TVS supply chain.